The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, coming back here to the Diagnostic Trading Hour. And I'm your host, Darrell Martin, right here on TFNN. And don't forget, you can watch trader screens on your charts, 9 hours of live trader commentary each and every day, right there at TFNN.com on Tiger TV, and also check out the archives, Diagnostic Trading Hour over there on Channel 7. And if you go to TFNN.mobi on your mobile phone, you can listen to us anywhere, even when you're away from your desk, to catch up on the markets and where things are headed. Right now, we got the S&P is down 10 points on the day. We got the Russell down 5, almost 6 points right now. We have the NASDAQ down 27, and the Dow is down 87 points on the day. Copper is down about 0.75%, but the other metals are moving on up. We got gold is up right now 12 points, up 1% on the day. We got silver up 1.75%, so nice move right there on silver. Natural gas, commodities are flying. We got natural gas right now is up 4.7, almost 5% today alone on natural gas, with the oil, with the natural gas inventory report in right there. We go in and look at, we'll check that out in a little bit. We got oil right now. Oil is up 1.5%. And so a nice big move on oil, flew on up. And we had two magnets that we were targeting. We definitely hit the top magnet and then some. I got to take off those positions at a full profit. That was my, unfortunately, that was the side that I was going in for the hedge on. And so, which is not a bad thing. I mean, I, made about $1,000 on that trade. Then hedged off my risk on the other side. Still got time. Who knows? Maybe it'll crash on back down. But anyways, I hedged off the short side, so I'm happy. So now we got the, there's still that short left for if it moves way back down, but it really broke up. We'll take a look at that trade here in a little bit. We'll get on over at our ags on corn and soybeans. We got corn is pretty slow right now. It's up only 2.5 points. We got soybeans flying down 32 points. Over a 2% move. Like I said, some great action in the commodities. We'll get on over at euro dollar. We got the euro dollar right now. It is up 17 pips. We got the Aussie dollar at 43. The pound dollar is up 29 pips. Dollar franc is down 6. Dollar CAD is down 18. Dollar yen down 27 pips. Aussie yen up 33. So Aussie getting some strength there against the yen. But yen gaining against everything else. We got the euro yen is down 5. We got the pound yen down basically 1 pip. Pretty much flat on the day. Euro pound is currently up 3 pips on the day. All right, well, that gets us caught up right there. Let's go through and let's look at a few of these news trades. We'll also bring up oil. I want to check that out with you because we've been discussing that off and on. Let me see if I can find that chart. I know I had it open somewhere over here. If not, I'll just open another one and grab it, maybe on one of my other workspaces, and just to make it easy. Okay, so let me flip on over. We'll go on back to oil and bring up the 10-minute bars. I'll throw that on. And I also want to look at natural gas. We had a nice big move. I want to talk about how you could have played that potentially. Look at the spread prices. Look at the expected moves on everything. And we'll walk through it all step by step and check out some of the other reports we had come out today. So had a decent little variety in trades that you could potentially take advantage of out here. And let me see. Shrink that, get that out of the way, move a couple things over. And then have the chart ought to render up on here in just a second for you to be able to see it over on Tiger TV. Just one more minute, it'll update, and you'll have it. Come on, there we go. Okay, so let's look at where we are. Let's look at where everything's going. Let's look at what kind of movement we got. We had a massive move on oil. Ran on up to the 2 deviation level, breaking 106. Fill up your gas pump now. Oil is just climbing. So starting to look at those other battery-powered cars now. Tesla's going to be taking off the more oil goes up. I mean, they're probably driving it up. But anyway, so going right on over here, checking this out. We moved up to 1 deviation, and we did that early at 4 a.m. Okay, that was when the big move happened right there. Sure, we can find some nice news backing that up. It hung out at 1 deviation for about an hour and a half or so, and then it ran right up to 2 before the market even got to open. It's up there at 6 a.m. And it's been hanging out really at 2 and 1.5, just bouncing between the two levels ever since then. I woke up this morning and I saw my position that I had on where I was long the 104.75s or whatever, was at basically max profit. It was at $96. Closed that trade out, took my profit. Like I said, helped me hedge off the risk I had on the short position. And so what do we have in that short position? Let's check that out. Now that we got the deviation coverage, I'm going to pull deviations off for a minute just to make this a little easier to back out on. And we'll also pull out some expected ranges. And we'll pull out some close to closes. Let's get it cleaner and cleaner and cleaner. Okay. So with all that on there, so we can get rid of velocity, we can get rid of time. Okay, I just keep cleaning it up and adding more things on or taking things off just to make the chart nice and clean. Let's see, the last thing I want to do on this chart before we get in to sort of look at some volume analysis with it. There we go. Okay. So once that populates up, and we'll go back and we'll check out some of the moves we have over here. But what we were looking for is we had this high, and I closed out a bunch of those. Got a few more positions left on there that I need to maintain. But we got, let's see, pull this up. Okay, so we had a high over here last week, or not last week, this week that we were looking at, and that was with that 105. Here's this massive high volume bar. So I was taking profits on the positions from earlier. So right there, that was one of our magnet prices, okay? And then if we go a little bit earlier, right over here, we had another magnet right there, okay? And that's where the market was bouncing in between that. Now, we also had a magnet going on down because there was literally nothing in between this move to get in our way. And so if I go over here and find this really high volume down here, I mean, we're talking about right around 102.60, right over here, 102.65 or so. I mean, you can put it on an up-close bar or whatever. About 102.75, right there, that's where our next magnet price level was. So that was going to be our down focus for if the market was going down, that's what we were shooting for, okay? And then if the market went up, we're expecting it to go on back up to this level. And then this is sort of just neutral territory. It's been a support resistance over and over again. And I know we had like one more level in there. Let's see if we can find that. So yeah, there's the other level right there. It just kept playing. So right in this, like we just kept having this range again and again and again. And then finally it started to break out. Started to move, getting a little bit of volatility there. But nothing happening. And then this morning, the market wakes up. Starts running up, blows through. Okay, look, I mean, it didn't seem like a big move. Then all of a sudden, like, bam. Okay, we had that 105 there. Busts right through it with some, some decent volume, but just keeps going. Doesn't have absolutely impressive volume until about this point right here. Okay, so that's where we're starting to see, some impressive volume, and that's about a little over 8,000, almost 8,500 contracts. And so we can go to that point. We go, well, what happened on that? That was actually a down close bar. It was not an up close. So right there, and now that's going to make this our next lower level. Okay, and so we'll go in. Let's go for red there. Okay, and we can go ahead and make these levels because they haven't really been busted through with major volume. I mean, it went over here, and we've been bouncing, but there's not a lot happening. So I'm just going to leave those as pink at this point. And then right here, I mean, this is really our most active current level. But, the market will come back down to these points. And right here, so we'll go ahead and mark those. And then I like to go in and, since we have surpassed these levels, just do something to, offset them. Okay? And so right now we have the market coming right down to this point. That's the low of the high volume bar that took place at 9:10 this morning. Market ran up, and then we had 8,500 contracts or so being traded right there at that high level. And now it's like trying to back up and just trying to find the last time the market's been, at that level. And let's see what we got. Let's see here. I mean, we need to get all the way up to, we're going for a 107, right? So now I can just grab this and just start scrolling back. And, yeah, we have a problem, right? There's not really anything to find. So what I'll do, too, is I'll also pull up just a bigger chart and go, hey, have we ever been here? Where's it going? I know we have, but it's been a while. So let's check something out that you might find interesting as we pull it up. Let's go in. Let's grab weekly charts. There we go. See, you start seeing a little bit of different thing. I want you to notice when we start up to these levels, this is pretty major, like 110. Look what happens when it gets to about 110 bucks. Okay, over the last couple of years. Market gets up there and it flies down. I'm talking about oil. Okay? So, I mean, we go into a nice bear trend. When I say bear trend, I mean, we're talking a solid, 10, 20, sometimes 30 points, which is a lot of money. Every point's $1,000 on oil, okay? Got 100 ticks, $10 a tick, 30 points. That's 30 grand, okay? Anyway, so we'll dig into this a little bit deeper when we get back. Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, I'm back here to the Diagnostic Trading Hour. And so we're just going through, checking out where all the markets are at right now. And pulling up a couple things that I'm looking at to see. And notice that it's sort of an interesting pattern as well, sort of a trend line, multi-year trend line. And I went and pulled in the monthly contracts on up. And let's see here. Let me throw on a little shortcut for a toolbar. All right. And then we'll grab a ray over here. Okay, so sort of see, a little bit of a trend happening right there. Keeps coming back up, but we are pushing that level as well. So, meaning, like right here, this was the trend. It broke that. Then here, that was the trend. And we're just starting to break the trend line if we move that trend line up. So, you can look at some of those trend lines on it. We can do a lot of things. We can do fib levels. I mean, you can have a lot of, you can do infinite, obviously. Analysis right there. There's our low to our high. Right now we're at the 61% fib level over the last 3 years here, and hitting right off of that level at this point. You can go in. You can do the opposite trend line. We can go over here, and I mean this is where this trading starts getting confusing, right? Because this rabbit hole is infinite. But right there, I mean that is really following pretty well. So we could see, basically, by following that trend line, we could actually expect if it comes back down and hits, say, 100 or 98 or whatever, especially if that ends up lining up. Let's say we get over here and it lines up with one of the fib levels for a bounce off of that point. And we're noticing that, there's so many, bars between here. If I do a little count, I can grab this and go to here. Okay, so that's 10 bars between that point. We got 9 bars right there between that one So right now we're on bar 5. So now these are monthly charts, okay? So basically within the next, 4 months, we can see it pull back down to this level. And you can go and you start doing measurements of how far does it usually go before it pulls back, and et cetera, et cetera. But bottom line, if we got about 10 bars, then, to get 10 bars up over here, you can't really draw it past that. But we go, 1, 2, 3, 4, 5. And so at 5 bars, we'd probably expect it to be somewhere around a pullback to about 94.85. Okay? If it continues on that trend, on that uptrend. And would not be surprising to see it sort of pop up here, come back down, and sort of keep doing that same thing until finally it exhausts itself out. To find out any kind of validity on that concept, on that idea, seeing that we have about 9 to 10 bars in between each pullback to the trend line, I'd go back and you start doing analysis. You got to pull a lot more data than I have up right now, but you can start doing more analysis on it and seeing, does it follow that kind of pattern? What kind of pattern did it follow on the drop down here? So we go, okay, well, here's the high. Here's a pullback. Okay, we had about 9 months in between that. And this one, now this is massive. This is actually, it broke through. We never actually got a full pullback. Got to tighten it up a little bit. Let's see here. About 7 bars right there. Then you can take that one and you can go to the next few levels here, about 7 more bars. So the downside, it was going a little faster. The upside is going a little slower. Not a big surprise. Big thing I want you to see is just looking at the overall archery principle of a high is like at 120. 110 is the last couple. It fell in 2013 right here, right at around 110. So 109.05 was a high last year. Had a little bit higher high. So we've been making lower and lower highs. So that's that downtrend I was starting off with you on. Talking about just looking at the downtrend market, we're making lower and lower highs. If we make a higher high, then we're going to break that trend at this point. Okay? So we do have a downtrend in the market. We also have an uptrend in the market. Now you can start coming up with pendants and everything else. And I don't get into this stuff that much. You've watched my show enough to know I'm not always diving into these things. But we are coming at a point where you can see it's building up. Over the last several years. So would not be a surprise to see it come back down. Like I said, basically within the next 4 months, these are monthly bars. Back on down here. So if we have 1, 2, 3, 4 bars, probably like I said, looking at 93, and you basically have these ranges you can play. Very long-term moves, okay? So we'll see if it breaks on up and what you can do with that. But we definitely have room to the upside. And now that we know when it last broke that high, we can go back to that time frame to look for magnets above where we are. We'll do that when we get back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, let's go on back here to the Diagnostic Trading Hour. So I'm looking at the current price over here and where we're at right now, and we just set a magnet just now right here this morning at 9:20. We had surpassed 8,000 contracts. That's basically what I'm using over on oil. And on that contract right there, what you can see is we basically set it right at pretty much 106, okay? You know, give or take a few pennies there. And you can see it's just been bouncing off that 106 level over and over and over again all morning long. Well, the last time we were up at this price was September of last year. So I'm going to go on back to September of last year, intraday data. One of the reasons I like using the Ninja platform is I can pull intraday data down to the minute. A year back, most platforms don't allow you to do that. I love Thinkorswim for a lot of things, but it doesn't let me get all that intraday, like minute data that far back. So, going over here, looking at this and going, all right, so let's find out. Oh, there's a lot of high magnet bars going on right here. Look at this on this day. I mean, we got, that one's pretty close. What is that? That's basically 7,775 contracts, okay? And then we got, it's just exceeding 8,000 over and over again. And look at these. These are all right at the same level. 106, 106, 106, 106. I mean, with, you know, give or take 15 cents. Massive magnet price being formed back there. And that was actually August 30th, okay? And when it dropped off of it, look at this drop on the following Sunday there, it looks like. So that should scare you from holding it into the oil into the weekend. Wow. So we would see oil go from 106 down to 102.60 in 10 minutes on the open on Sunday on September 1st. Yeah, that should definitely make you nervous about holding a long position in. Because that's what happened last time. It was sitting at the 106 magnet level. Okay? So just to be aware, if you think you got what it takes to hold a, 4 or 5 point drop, I mean, that's $4,000 a contract, so that could be pretty painful. I'm not saying it is going to drop. I'm just saying be aware that that is there, okay? And so you don't get caught. All right, so now we have this day covered. Let's go ahead and go back. See if we have anything above this level. Let's see, right here, we got this spike. So sort of down above, so a little bit of a range right there. 107. This one's a little bit lower. Could bring that down. That's actually a much higher volume bar than the one I was setting it on before. It was the one that just barely exceeded. So I'm going to go with that one that's higher because it went up. It didn't quite hit 8,000 contracts, and it failed off of that. So we're going to get more credence right there to that level, that low. That bar is 106.75. Okay. And let's see. Let's keep going on back. Let's see if we see anything else. Okay, here we go. This one gives us a high volume bar a little bit higher up. And that's going to be right here, the high of this bar. We'll change that on over. Just trying to, like I said, get you some current upper magnets. We got the lower magnets covered pretty well. And that gives us a high up at 108.22. Okay, magnet price right there. Do we have any highs above that? Yeah, we got a couple we can throw on. We got this one. 108.61. That's pretty close, but we'll go ahead and just throw it on there. And let's see, right here, that's the exact same price, so we got two of them, so that's good. And then we got this one, which is actually at the exact same price, at 108.22 that we had later, and then we got one right here, which is also at 108.22, so multiple times that magnet price is being confirmed. Going back a little bit further, and we're going to see continual confirmation of the exact same magnets at this point. So I don't think it surpassed our levels at any other time during the year. Let's see, we'll go back to August. I'm trying to see if there's anything in August where it went higher, but I think that was it. We'll go a little bit faster here. There we go. So we started to get a little bit of that green, but okay. So now we fast forward to present day. What does this mean? Okay, well, it means that, I showed you earlier, I was looking at that monthly, and I was like, hey, we're at a pretty good turning point right now. We also found out that this 106 marker is a massive magnet. It has pushed up above it, but it has not been able to push up above it with exceeding volume. With the volume exceeding 8,000 contracts is what we consider to be, I guess you could say, significant volume. Okay? So we have not had significant volume on oil really above the 106 level over here. So it tried to go up. It tried to hit the next magnet, which is up there at 106.77. Was not quite able to reach it. Pulled on back to the magnet again, and has just been oscillating ever since. So it was making a run for it, but it did not get there. The levels that we got above where we are right now, just so you can have those levels marked down, is you're going to look at like 106.75. Okay, we're going to have 108.34 and 108.70. I'm going to have to go back and get even more data if we go above that. But that ought to cover us pretty good, at least for ideally the next couple of days. And, I mean, I hope it falls down and crashes because I have some nice contracts down here. I'll bring in another 10,000 or so if it drops on down to 102.75. We'll see what happens. But, anyway, so we got that contract right there. We're sitting at the magnet level, which has been set and not broken, which is right here, right about 106, okay? If it starts moving down, where is it going to go to, okay? It's going to drop right on back down to that last magnet we were targeting. Before we were long here, and we had a long and a short magnet we were going after. The long magnet was actually like 105, and I got the 104.75 binary contracts. So, looking at that, that's basically, if we drop back down, we're dropping back down to 105. If we go up, we're going up to 106.70. Okay? We have 24 hours, pretty much left almost in the markets for oil. Like 25 hours, I guess, left to really wrap up the pits for this week. So it is very possible, basically, especially on the massive moves we've been getting, to hit one of those two levels before Friday rolls around. So understanding that, hey, that's a possibility. It could be coming on up. Then, what potential trades could we do? And let's see. Let me pull it up on here on the screen. We'll check it out. Let's see what we got. So like I said, that long one I just took profit on this morning, but I want to see. If you haven't done that, I definitely would do that. No reason to let that thing sit out there when it got up to $96. Let's see, what price did I get out of that contract from this morning? Exit price. Let's see here. All right. Okay, got out at $95. So we're sort of oscillating there, but I got out $95 out of the 104.75s. Right now, if I go over and I look at oil and scroll on down over here, we see what we got left. For Friday, okay, and the 104.75s, yeah, I mean, they're sitting like at $96 right now. And let's see here. So $96 on those. So now let's look at it and see, well, if we were to hit one of these two levels, we got 106.75, we got 105. Okay? So do we have anything we can use with that? 106.75, we got those. They're $17. Okay? We don't really have a 105. We got the 104.75s back. So you could look at doing a potential strangle on that. It's a perfect price for it. I mean, $17 and $4, that's $20. If you got out when either strike was hit, you'd make $23 a side. So if it flew up and you got out, I mean, you'd net $23. So if we bought at 17, sold at 43, lost 4 on the other side. So that's actually not a bad strangle. And the only thing I don't like about the 104.75s is that's not our magnet target. So our magnet target really is like 105. So that'd be requiring us to push down a little bit. I mean, 25 cents isn't that big of a deal, but it would require us to push down. You can sort of see how it really respected that 104.75 level. When it finally did broke it shot up like a rocket. So I'd say that'd be the one downside on the trade. You might honestly be better off on this trade. I don't see a lot of, and I could be wrong, but I don't see a lot of movement happening between now and 6 o'clock on oil. So what may be the better choice is to wait until 6 o'clock when oil opens back up on Nadex and look at the daily Friday expiration contracts compared to the weekly. They'll actually appear at the exact same. You'll see D and W's right here, okay, popping up. And so you'll actually be able to see all of them, and I think you might be able to get a little bit better, maybe like a 105 with that 106.75. You may be able to combine those two. It'll cost you a little bit more, most likely, because it'll be closer. But if you can get that for about a $20 to $25, not 20, but $25 to $30 combined risk, that might be the better trade, just because I don't know if it can get there. We only have a day left for it to do it. I mean, it may happen overnight. I mean, I did not expect to wake up this morning and see oil up at 106 or whatever. But and it flew up there, and that was great. Took profit, but just try to be conservative on that front. So that's pretty much the summary I got for you on oil. Hopefully that'll help you out a little bit. And hopefully you wrote down all those magnet prices. And let's see, what do we got over here? Covering the oil ones now. Let's go ahead and check out natural gas. Okay. We had a natural gas release today. And let me just open up a chart for us on that. And let's see here. Natural gas. All right. Don't forget, everything should be rolling on over, by the way. We're rolling over oil right now. We're going to be rolling over all the indices. So, are in progress at this moment. Indices and oil are rolling over to the following month, going into August for oil, going into September for your, Russell, Dow, small cap, DAX, FTSE, S&P, etc. So just a nice friendly reminder there for you. Let's see, going into minutes, going into 10 minutes. And let me pull up. We'll do magnet pricing on it, make it easy. And then I'll load the chart up right here on the screen for you. Okay? And I think I have default 24/7. I don't know why it's telling me that, but I'll do it again. All right, let's see here. There we go. All right. Got default 24/7 in, and then it wants my minutes, of course, to be 10 minutes on my volume. Okay, so got that in. Now let's check out this natural gas report because we had some nice moves. And where did we land on the trade? What were the expectations of movement? What was the pricing? And put all those pieces together for you. Okay, well, we went up to one deviation. That's perfect. And as big of a move as it was today. Now look at this. I want you to check this out. Okay? Look at yesterday. One deviation is about half the size. Look at today. One deviation is like twice the size of yesterday. Why is that? Because we had natural gas inventory coming out today. And deviation levels are based on implied volatility. And since the inventory report was coming out, there was a larger expected move. Therefore, more implied volatility was in the options. When I extracted that implied volatility and put it in the deviation formula, it made it wider. Okay, and look how it moved right up to one deviation. I mean, it's just right there. That would have been a 2 deviation move otherwise. But so that expectation was built in there, like we thought that was going to happen. And it did exactly as expected. Looking on over on the inventory report, we had an expectation of 111 billion British thermal units in storage. There was 107. So a little lower than expected. Not a massive difference, but nevertheless enough to drive price up. And of course, the oil, I'm sure, helped carry it too. But that was fired off by the inventory report itself. There. We'll talk about this a little bit more when we get back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so what I'm looking at is I'm looking at this trade right here over on natural gas. And pulling the chart up of the spread, and I got, of course, the chart up of natural gas itself. And a few things to notice. One, of course, we had the deviation spot on, okay, when looking at the trade. I'm not sure why that thing redrew. But, like there's barely any trades on the thing. It barely had any. But let's go in and adjust that back over to mid. That's why it's messing up. Okay. There we go. Okay, so now I can bring that to 30 minutes. Let's just shrink it. There we go. Over here, we're going to grab this. We're going to bring this one to 30 minutes as well. Lock that one in there. Grab this. We'll make it a 30-minute chart. Okay, focusing really on the 10 a.m. price. Got about 10 ticks on one side. Looking at the 10 a.m. on the other side. This is one thing that people can miss because they think everything has to be balanced. It doesn't have to be. 50 ticks on the other side. Okay. So looking at about a 60 tick risk on the straddle. If we look at 60 ticks, that means we need to move how much to be a profitable trade. Well, if I pull up a handy little calculator, I need to make 60 ticks plus the risk on the other side. So let's just look at the upside real quick because that's the direction it went to show you how that works out. And on the upside, I think it's hiding now. Let's see, where is my calculator? There it is. Okay. The good and bad thing about the pen program is you can really hide stuff. You can't find it at all. Okay. So we got 60 ticks, and I need to make 60 plus 3 on their side. In this case, it's 10. So I need to move 70 ticks above the price where I bought the upper spread. Well, I bought the upper spread at a 45.50 there. So let's see, what is that? 4.550 plus 0.070. And because the next ticks in 0.01 or 0.001. So that put me up at 462. That's my profit target for a 1-to-1 or better. So now let's look at, is that realistic? Well, here's the expected move that I said would happen in 1 hour for this specific hour on natural gas. And you can see we went right to that right off the report, and then it chilled out. And it closed, actually. Went a little bit above that, but then it came back down and closed right at the expected move for that hour. And you can see it, and the expected moves went way down for the following hours. And you can see it's not that I do this like after the fact. I'm plotting the next hour out right now. So I'm always an hour in advance on my plots. But that movement, the reason that's so important is I need to know, is that movement that I'm expecting up to 4.62, is that a realistic move for me able to accomplish my 1-to-1? Yes, it is. It's within the expected move of the day. If it's within the expected move of the hour, that means I could go in and I could choose the 11 o'clock expirations. I was looking at the 2:30s, which I guarantee you cost a lot more than the 11 a.m.s, okay? Because they had all that additional premium in them. So if you just did 2:30s, you easily hit your 1-to-1 and then some. Okay, going on, if we're at 74 right now, then that puts you up about another 12 ticks. So on a $60 risk, you'd be up about $72 right now. If you did and you did the 11 a.m.s, you'd be up even more on the trade. So trade worked out very well. That's using natural gas. That's combining it with deviation levels to know an expected realistic move for a day. But it's also combined with expected moves within an hour, so you can really fine-tune down to the best expiration for your trade. And worked out very well. I hope you'll have a great day, and I will see you tomorrow morning on the Bull Bear Binary Hour, and then the afternoon on the Diagnostic Trading Hour right here on TFNN. Stay tuned for another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.